Good morning everyone, welcome to the official YouTube channel of Officer Study 24/7. My name is Amanjot and today we are going to practice the important questions which are related to your principle and practices of banking. So before starting the session, let me know, am I audible to all of you and the PPT is also visible? Are we good to go? Good morning Ranjan, good morning PT. Let me know, am I audible? Okay, everything is okay. Now let's start the session in which we are going to discuss some important questions which is related to our PPP subject. Okay, so before starting the session, one thing important, that is if you are new to the channel, do subscribe the channel and press the bell icon so that you will get all the notifications for your upcoming sessions on the Office Adda 24/7. If you have not downloaded yet the Adda 24/7 application, then do download the application, because in this application you will find the questions related to the banking awareness, which will help you to make sure that your that your concepts related to banking awareness will be good. Okay, and next very important thing, that is the batch for your English medium PPB and your AFB and your LRB. So the batch for the English medium for all the three subjects for your JAIIB preparation is coming from 16th of April. So the batch is starting from 16th of April. In this batch, PPB's classes will be start from the 18th of April. So this batch will be for all of you who are preparing for the English medium section, for the English medium exam, and trying to make sure that your selection will be done in the month of June 2022. So this batch is starting from 16th of April. To join this batch, you can enroll from the Adda 24/7 application or the website of Adda 24/7. You have to use a certain code, that is Y496. After using this code on Adda 24/7 application, you will get 78% discount on the amount. Okay, and the books will be included in this particular batch, which you can read by yourselves also, and we are there to help you that how to read the books for your preparation and to make sure that the selection will be done in this particular exam. So let's start with the first question, that is related to your capital market, in which we are asking that the market in which new securities are issued by the corporations to raise funds are called. So which of the following market is the market in which new securities are issued by companies, the corporates, to raise funds from the market? Which of the following is the right answer? Is it primary market? Is it secondary market? Is it gross market? Is it proceeds market? What will be the right answer? Good morning Srinivas, good morning Parul. So today's session is based on the capital markets MCQs, in which we are going to discuss all the concepts related to our questions and all the concepts which are in the options. Okay, we are going to discuss that. Now first let me know what will be the answer of the question, and do make sure that whenever you are answering any question, mention the question number also. So we are talking about capital market, we are talking about securities market, and which type of security markets deal with the new issues or deal with the fresh issues in the market. Is it primary, secondary, gross and proceed? Debashish is saying that is secondary market. Kedar is also saying secondary market. What about rest? See, the right answer will be your primary market, because we are talking about the new securities. Whenever we are talking about capital market, what is capital market? The market for long-term securities, in which for more than 1 year companies or the corporations raising funds for their business. So whenever we are talking about capital market, in capital market, trading has done in the part of two markets, that is primary and secondary. So in primary market, we are always issuing new securities. In primary market, we are always issuing new securities, and secondary market is for the market for existing security. If I am talking about primary market, it is also known as new issue market or the fresh issue market. because in this market we are issuing new securities. We are issuing new securities, and only the securities can be purchased in this particular market. You cannot sold this particular securities, because this is the primary market where the new issues, where the new securities are traded by the companies. So primary market is also known as new issue market or new security market or fresh issue market, in which always the company will issue the shares for the public for raising fund from the market. When we come to the secondary market is also known as market for existing securities. Market for existing securities. And market for existing security means the already sold and bought security will be resold or repurchased in this particular market. So whenever we are talking about secondary market, here the existing security will be traded, the existing security will be sell and purchased by the investors, and in this particular market you can purchase and as well as sell the securities. Okay, so primary market is the market where the company is issuing security for the public for a fresh issue. Okay, and secondary market is a market where already existing securities will be traded between the investors, companies or shareholders. Okay, so whenever we are talking about primary market, always the selling of shares will be done by the company, and in secondary market the selling of shares can be done by the company, can be done by the individual, can be done by the shareholder or investor. But when we are talking about primary market, always it covers the fresh issue, it covers the new issues. That's why company will issue shares. So whenever we are talking about the market for new security, it will be known as primary market. Okay, so primary market will be the right answer for the first question. Now second, hedging means. What does hedging means? First option is saying it is a type of share. Second is saying it comes under money market. Third is saying when an investor invests its fund in different sector to minimize the risk. Fourth is saying when investor invests its fund in single company to raise fund for the company. Now what will be the right answer for the second question? We are talking about hedging. What is hedging? Those candidates who are live in the session, do share the session with your colleagues and friends, and also like the session. Now let me know what will be the right answer for the second question. What does hedging means? Debashish is saying it will be C. That is when investor invests its fund in different sector to minimize the risk. Venkat is also saying C. See, if we are talking about hedging, hedging is the process. What is hedging? Hedging is the process. First of all, let's understand what is portfolio investment. When we are talking about portfolio investment, what does portfolio investment means? Because the hedging is related to portfolio investment. Let's say, for example, I have a certain amount of money which I want to invest in the market. Let's say I have a 10 lakh amount of money. I have a certain money that is 10 lakh and I want to invest this 10 lakh rupee in the market. Now what should I do? If I invest the whole money in the secondary market or in the share market, in the commodity market or in the derivative market, there will be high risk. Okay, so I don't want to take that much risk. So what I can do, I can invest my fund in the diversified sector. Let's say I have invested this money in gold. I have invested this money in share market. I have invested this money in commodity market. Acha, who regulates the commodity market? Let me know. Who regulates the commodity market? Next I have invested this money in FD. I have done the fixed deposit in a certain bank. Then I have invested this money in the derivatives. Or I can invest this money, amount of this money in the real estate also. So what I did here, I want to minimize my risks. That's why I invested my funds in diversified sector, in different sector. Because if I invested the whole amount of 10 lakh in the share market and there will be a high risk. We know that share market gives a high returns, but it is also includes the high risk. So I don't want to take that much risk. That's why I diversified my funds in the different sectors. Now this is known as portfolio investment. This is known as portfolio investment. Whenever an investor invests his or her money in diversified sector, that investment will be known as your portfolio investment, and the process of investing in diversified sector will be known as hedging. So the right answer will be C. Everyone is saying the right answer, that is C. Very good. So simply, portfolio investment means when an investor invests his or her money in diversified sector to minimize his or her risk, will be known as portfolio investment, and whenever this process is whenever we are processing this process, it is known as hedging. Okay, so the right answer will be your C option, that is correct. MCX is a commodity exchange, it is not a regulator, Debashish. First of all, let's understand regulator. Who is the regulator of commodity market? Initially, it was the Forward Market Commission, FMC. You all have heard about the FMC. FMC stands for Forward Market Commission. It was the regulatory body, or it was the regulator of the commodity market. But in 2015-16 financial year budget, in 2015-16 budget, Government of India has merged FMC with SEBI. Now, who regulates the commodity market? SEBI regulates the commodity market, not MCX or not FMC. So, first of all, remember the full form of FMC, that is Forward Market Commission. It was the regulatory body of your commodity market, but in 2015 budget, we have merged both. We have merged FMC and SEBI. So, now the SEBI is the regulatory body of your commodity market, your share market, your derivative market, your venture capitalist, your credit rating agencies, all these comes under the SEBI. Okay, now SEBI stands for Securities and Exchange Board of India, that is the regulatory body of our investment market. Clear? Now let's move forward to the third question, that is related to financial derivatives. Here we are asking which of the following are included under the financial derivative. Now what will be the right answer? Is it stocks, is it bond, is it forward contracts, is it A and C? We are talking about the derivatives. Okay, make sure on the keyword you should read the keyword. We are talking about the derivative, we are not talking about the financial instruments. Okay, now what will be the right answer? So what is MCX? MCX stands for Multi Commodity Exchange. As we know, share market is the market which is regulated by SEBI. But when it comes to where you can sell or purchase your shares, that is your stock exchange, like Bombay Stock Exchange and National Stock Exchange. These are the stock exchange where we are selling or purchasing our shares or equities. Similarly, when you are selling and purchasing your commodity markets, in the commodity market, you use multi-commodity exchange platform. But the regulatory body will be SEBI, okay? Debashish is saying D. Srinivas is saying C. Bob is saying D. What about rest? Now, do make sure whenever you are live in the session, do participate in the questions. See, the right answer will be, we are asking about financial derivative. Stocks are not derivatives. Bonds are not derivatives. The right answer will be forward contract only. The right answer will be forward contracts only. Because when we are talking about bonds, bonds are debt instrument. Bonds are debt instrument. Similarly, your debentures are also debt instrument. Debentures are also debt instrument. Whenever we are talking about stocks, we are talking about equity. Okay, so the right answer will be your C, that is forward contract. Clear? So what is derivative? If we are talking about derivative, what is derivative? Let me know. Yes, so right answer will be your C option, that is forward contract. Now let me know what is derivative means. Derivative market is also regulated by SEBI, right? Now what does it means? See, whenever we are talking about capital market, the trading in capital market is divided into two parts. The capital market includes both. It includes equity market. It includes equity market and it includes debt market. Okay, equity and debt markets. So first of all, whenever we are talking about equity market, it is the market where we are selling and purchasing the shares and where the profit and loss depends on the profit and loss of the company, because whenever you are giving shares to the public, they are investing in your company and you are giving a certain percentage of ownership to that particular investor because they are the partnership in your company. They have the partnership in your company. So equity market is the market where the trading of shares will be done. And when we are talking about debt market, debt means your loan. Debt means loan. So whenever we are talking about debt market, it covers two things, that is bonds and debentures. Because in bonds and debenture, a certain period of time will be already decided. It means it has given a certain maturity period and it is already decided that how much amount of dividend will be provided to you, how much amount of interest will be provided to you on your investment. So bonds and debenture is a kind of a loan instrument, because in this instrument. Company has the obligation to return your fund with the interest. When it comes to shares are equities, or in this condition the company do not have any kind of obligation to repay you your investment with interest, because you are the partner of the company. You got the ownership of that percent of shares which you have invested in the company. So the profit and loss of yours will be dependent on the profit and loss of the company. That's why it is known as equity market. So capital market deals with two markets, that is equity and your debt market. Okay, nobody told me that what is for derivative. Let's understand what is derivative first. Whenever we are talking about derivative, derivative means simply a product. What is derivative? Derivative is a product. It can be anything. It can be your goods, it can be your securities, it can be anything. So what is derivative? Derivative is a product whose value is derived from two or more basic variables, called underlying asset, So what is derivative? Derivative simply is a product whose value is derived from two or more basic variables, and that variables are known as underlying asset. Now, what does this underlying assets means? Whenever we are talking about underlying assets, these are the assets on which the value of derivative will be decided. Let's say, for example, let's take an example. Let's say, for example, we are purchasing certain laptops. We are exporting certain laptops. Let's say we are exporting 1000 laptops. Exporting from US. Okay, we are exporting from USA 1000 laptops. Okay, now I have given a certain standard to the USA's importer. Let's say we are importing. That's why we have to pay the amount, है ना? So we are importing certain laptops from USA, and we have given a certain standard that this quality of laptop we want. We want the motherboard in this quality, we want this things, or etc. Whatever the standard will be there in the laptops, we have given them that we want a certain laptop with these standards, with these qualities. And they agreed that we will maintain this standard and we will provide you certain laptops on the agreed date. Now when it comes to the payment, let's say the importer has shipped the product from USA and we got product in India. Okay. Now when it comes to the payment, now the payment or the trading, whatever trading we are doing on laptop, it means we are purchasing goods from USA, then we have to pay in the form of US dollar. So when we are trying to pay the amount of 1000 laptops, what we have to do, we have to make sure that what is the right now exchange rate is of our currency. Okay, $1 equals to how much rupee is running. We have to make sure that we know that amount, because let's say they have said that one laptop will be sold to you on amount of $100. Now how much amount you have to pay to the importer, you have to pay to the exporter, so that your trading will be completed. It depends on the exchange rate of your currency. If $1 equals to 70 rupees, you have to pay accordingly to that. If $1 equals to 50 rupees, you have to pay according to that. It means the whole trade, the whole selling and purchasing, the whole exporting and importing of laptops will depend on the exchange rate of the currency. That's why this is known as underlying asset. This exchange rate will known as underlying asset. This will be known as underlying asset. Okay, and this laptop will become a derivative here, because the derivative is a product whose value is derived from two or more basic variables, and that variables is known as underlying assets. So the value of laptop, how much amount I have to pay to the exporter, it depends on the exchange rate of our currency. So this exchange rate will be known as underlying asset, and that laptop is a product which is known as derivative. Okay, now let me know derivative is clear to everyone. Is it clear? If there is no doubt, then do write that clear, so that we will continue with the next question. So what is derivative? Derivative is simply a product which is whose value is derived from two or more basic variables, that is known as your underlying asset. And underlying assets example can be your exchange rate, can be your index, that is Sensex and Nifty, can be your stock, can be your bonds, it can be anything, by which you are driving the value of your product which you are trading. So that is derivative. Let me know, clear to all? Okay, so the right answer will be your forward contract. Bonds and stocks not are your financial derivatives. The right answer will be your forward contract. Now let's move to the next question, that is what does it refers to here? What does it means here? Now answer this question. The question is asking that what does it refers here? Now the statement given to us is that it is an agreement to buy or sell an asset on a specified date for a specified period. Okay, or a specified price. Now it is a customized standard contract between two parties. Now what will be the right answer? Those candidates who are live in the session, do like the session and also share with your friends who are also preparing for JAIIB. Now what will be the answer of the fourth question? A, B, C or D? Is it forward contract? Is it future contract? Is it swap? Is it options? See, if you do not know the answer of any question, just write that we do not know, so that we do not have to waste time for the answer. Okay, and make sure you are active in the session. Do participate in the session. Bob is saying B, Venkat is saying B, that is future contract. Okay. So the right answer will be for the fourth question is correct, that is future contract. And how we can say that this is future contract, not a forward contract? Because in forward contract we use the same definition, that is saying it is an agreement to buy or sell an asset on a specified date for a specified price. The same definition will be used for the forward contract, but in the second statement it has said that it is a customized. Forward contracts are also customized, but forward contracts are not standard contracts. Forward contracts contain a certain risk. That risk is known as counterparty risk. In forward contract you have counterparty risk, that's why they are not standard contracts. But in future contracts you do not have risk, that's why they are standard contracts. So only difference between future and forward contract is that in the forward contract we have counterparty risk, but in future contract we do not have such kind of risk. Okay, so the right answer will be your B, that is future contracts. Now how many types of derivatives are there? Let's understand that also. We have discussed the definition of derivatives. Now how many types of derivatives are there? So first we have future contract. First we have future. Then we have forward. Then we have option. Then we have warrant. And at the end we have swap agreement. Okay, there are two types of options, that is call and put. So when it comes to future contracts, what are future contracts? Future contracts are a standard in which the two parties are agreed to on certain conditions that in the future date at the specified price they will exchange their goods and services. When it comes to forward contract, it is similar to the future contract, but the only difference is that it is not standard, because future contracts are traded over the counter. These are OTC derivative. What is OTC derivative means? Over the counter derivative. It means there is no mediator under the forward contract. That's why they are risky. That's why there is a counterparty risk. But when we are talking about future contracts are exchange traded contracts. Future contracts are exchange traded contracts, derivatives, because in this there are two parties which are exchanging their goods on a specified price on a specified date in future date, but they have the mediator between them, that is your stock exchange. It can be BSE, it can be NSE. So the right answer will be our question of first of all the future contract, because they are exchange traded contract and forward is the over the counter traded derivative. Now option has the obligation. Option gives the right, not the obligation. Okay, option gives the right, not the obligation, to sell and purchase. Whenever we want to purchase a certain securities, we use the call option. If you want to buy then we use the call option, and if you want to sell, then we use the put option. And what option is doing? Option gives you the right but not the obligation. It is not obligated that you have to sell or you have to purchase, but it gives you right, you can sell or you can purchase with the call and put option. Now when the maturity period of options will be increased, it converted into warrants. Okay, now what is swap agreement? Swap means you have to exchange something. So when the two financial institution exchange their financial instruments for a certain period of time, that is known as swap agreement. Okay, so these are the derivatives which we used to trade in the derivative market. Clear? So the right answer for the fourth question will be future contract, because these are standard. There is no counterparty risk because they are traded on exchange. Now next question is asking about which of the following pair is correct of financial institution and its regulatory body. So identify the correct pair of financial institution and its regulatory body in India. First is Nidhi company, that is regulated by state government. Second is housing finance companies, that is regulated by RBI. Third is venture capital companies, that is regulated by SEBI. Fourth is chit fund, that is regulated by state government. Now which of the following is right in context to the regulatory body of the financial institution? A, B, C or D? All except one, all except fourth, all are correct, all except second. What will be the right answer? A, B, C or D? See, it is very important to attempt the question to know the conceptual understanding of the topic. If you do not know the conceptual understanding, it will be hard to guess that what will be the right answer. So make sure when you are preparing for your exam, do understand the conceptual understanding. That is very important to answer any question. You can't guess the question by the terms. Let's say, for example, in the question it is asked that what is hard currency. You can't guess that the hard currency will be your coins or will be your gold or in anything, any currency which is in the hard form. You can't guess that. What is hard currency? Hard currency is simply the currency which is demandable in international market, which is easily convertible in another currency and which is universally acceptable. So the concepts related to your we can say principles and practices of banking are very important, because you can't guess the term by knowing the term. Venkat is saying and C and D. Okay, Parul is saying A, that is all except one. Nidhi companies are not regulated by state government. Not C but D. D is chit fund, state government. Okay, see. Let's discuss one by one. It is confirmed that housing finance companies are regulated by Reserve Bank of India now, because earlier it was regulated by NHB. Now what is NHB? National Housing Bank. It is all India financial institution. It was the wholly owned subsidiary of RBI. NHB was the wholly owned subsidiary of RBI, but in 2019 RBI has sold NHB to Government of India. Okay, RBI sold NHB to Government of India for the amount of 1420 crores. Okay, so it means NHB is not again is now not a subsidiary of Reserve Bank of India. That's why it is not regulating your housing finance companies. Okay, NHB is not regulating housing finance companies. It is regulated by now Reserve Bank of India itself. So the second is very much correct. It cannot be wrong. It is right. When it comes to venture capitalist, it is also correct because it is regulated by SEBI. When it comes to your Nidhi companies, again a Nidhi companies is not, first of all, Nidhi companies is regulated by your Ministry of Commerce and Industry. But when it comes to chit fund, it is your state government which regulates the chit fund. Respective state government regulates your chit fund. Achha, why chit funds are not secure? Why there is a lot of frauds in the chit fund? Is it have a regulatory body actually or not? So if we are talking about Nidhi companies, it is regulated by a certain ministry. The right answer will be your A. All except one will be right in context to your regulatory bodies and financial institution. Okay. Now let me know, is chit fund actually regulated by authority or not? Why there are so much frauds in the chit fund? Second is very much correct, Suresh, because RBI now regulates housing finance company. It was used, RBI not used to regulate, but now RBI regulates the housing finance companies because NHB, which was the subsidiary of Reserve Bank of India, sold to Government of India. So NHB not any more subsidiary of RBI. What is chit fund? You have seen Hera Fairy, the movie. The best example for chit fund, in which they are saying we will double your amount in the 30 days or 15 days. That is known as chit fund. In chit fund, what they are doing, they are just give you attractive investment offers. Then in a certain period of time, you will get the double amount, you will get the triple amount of your investment. And how you will get that amount? They use chit for that particular investment. Like there are certain people who are invested in the chit fund, they are become the part of the chit fund, then they will have a certain chit of with the name of the investor, and whatever name will come, the whole investment will be given to that person. That is chit fund. Okay, so they have a certain attractive investment offers in a certain limited period of time. Now why these are why there are so many frauds in the chit fund? Because it comes under the state government, and not all chit funds are regulated by state government, not all chit funds are registered. That's why we can see there are a lot of frauds in the chit fund, but it's not like it is an illegal activity. It is regulated by state government. Okay, now let's move forward to the next question. That is your sixth question. Which of the following statements are correct about the chicken market? What will be the right answer? We are talking about the chicken market here. Now, if we talk about capital market, there are certain types of investors or certain types of, we can say, markets, which has given the name of the animal. Let's say, for example, if we talk about SEBI, Securities and Exchange Board of India. Now, SEBI is known as watchdog of capital market. Why? We have given a certain name of the animals to the capital markets terminology, so that because they are representing that nature of the animal. That's why we have given that. Okay, now let me know which of the following statement is correct about the chicken market. Now, what are the different types of animals name given to the capital market? First is all your SEBI is known as watchdog. Then chicken market, there is a pig investor. Then there is a bear market, bear broker, bull market, bull broker, stag investors. Okay, after that we have ostrich investors. After that we have wolves investors. So there are a lot more names given to the investors or market on the name of animal. So first statement is saying in chicken market there is a downward trend to the of the indexes of a stock market. Second is saying the investor who are not willing to take risk are chicken investor. Third is saying the investor who are greedy are chicken investors. Which of the following is right? Is it only 1 and 2? Is it only 1 and 3? Is it all are correct, or it is only 2? What will be the right answer? It's a very simple question if you know the concept behind the animals of capital market. Bob is saying C, that is all are correct. Okay, what about rest? See, there is no negative marking. If you are giving a certain answer and there is that answer will be wrong, that there is no negative marking. At least do participate in the session. Stay active, stay live in the session. Parul is saying C, that is all are correct. No. All are not correct, because the first statement we are talking about, the chicken market is the downward trend of the index stock. No, it is not about the chicken market, it is about the bear market. Bear market is the one market in which downward trend we will see in the stock exchange. Okay, the bear market is the market where the prices of shares are keep falling, where the prices of the broker wants to that the shares prices will reduce regularly. So the right answer not be C, because first statement is not about the chicken market, it is about the bear market. If I am talking about second statement, that the investor who are not willing to take risk are chicken investors, that is very much true. Chicken investors are the investors who are not willing to take risk. They invest their amount in the capital market, but a very little amount, because they are not ready to take risk. They are not ready to lose their money in the capital market. Now the investor who greedy are chicken investor? No, the investors who are greedy are pig investors. Who are greedy, who invest a lot of money in the market. In fact, they know that there is a high risk in the capital market, but still they invest a lot of money in the capital market because they are greedy. Okay, and they are willing to take risk. That's why they are investing high money. The third statement is talking about pig investor, and the first statement is talking about bear market. So the right answer will be your D, that is only 2. Right answer will be your D, that is only 2. Okay. Now let's move forward to the next question, which is asking about which of the following best describes raising money through QIP by a listed company. Now, is it raising equity from promoters? Is it raising equity from QIBs? Is it raising equity from existing stakeholders, or is it both B and D? What will be the right answer? A, B, C or D? What is QIP? Venkat is saying B. Raising equity from QIB. Okay. QIB stands for Qualified Institutional Buyers. Okay. Bob is saying D. That is both B and D. Okay. What about rest? B and C. That's not an option. See, first of all, the right answer will be your B, that is raising equity from qualified institutional buyers. The qualified institutional buyers are the buyers which is commercial bank, it can be NBFC, it can be primary dealers. Those investors or those buyers who are registered or who are qualified to invest in certain securities of a listed company are known as qualified institutional buyers. So the right answer will be your raising equity from QIB when we are talking about QIP. Okay, so right answer will be your B option. Next, bonus issue is also known as which of the following? That is scrip issue, capitalization issue, right issue. Now, first of all, we should know what is bonus issue. So, what is bonus issue whenever we are talking about bonus issue? So, first of all, we know that there are certain sectors, or we have divided capital market in the two market, that is primary and secondary market. Primary market is the market where the issue of new securities take place, and the secondary market is the market where selling and purchasing of existing securities takes place. Okay, so whenever we are talking about primary market has the three sources to generate to raise fund from the capital market. In primary market we are using domestic source, it means we are raising money from India. Second, we are using foreign source, it means we are raising money from abroad. And third is other foreign source, in which the foreign companies invest in our country. We are not going abroad, they are coming to the India and they are investing in our company, that is other foreign source. So in primary market, the new securities are issued by company to raise fund from the market, and they have three sources. First is domestic, second is your foreign, and third is your other foreign source. So when we are talking about domestic source, we use a certain type of investment method from which we can raise fund. That is IPO, FPO, bonus issue, right issue. It can be your bonds, it can be your debentures. All these are the instruments which can be used to raise fund from the primary market under domestic source. Okay. Now when it comes to bonus issue is the type of issue when a company is providing shares to its existing shareholders free of cost. It means you are not taking any amount of money. You are not selling the securities. You are giving the security to the existing shareholder at no amount of money. Okay, so you are giving the securities to the existing shareholder free of cost. That is known as bonus issue. So the right answer will be your scrip and capitalization. It means both 1 and 2. Right issue is not bonus issue. Under right issue, you give right to the existing shareholders. To invest in your security. So whenever company is issuing its securities, so company gives first right to the existing shareholder, so that if you want to invest in our security, if you want to purchase our securities, you can purchase that. So when the company is giving first right to the existing shareholders to invest in the security, it is known as right issue. But bonus issue, when a company is giving shares to its existing shareholders at free of cost, that is known as bonus issue. So the right answer will be only 1 and 2. Right issue is not a bonus issue. Both are different. Next question. Which of the following statements are correct? So now we have to tell that which of the following statement is correct. First statement is asking about equities and derivatives are type of financial instrument. Second, we are saying equities are instrument for investment. Focus on the keywords. Equities and derivatives are financial instruments. Okay. Second is saying equities are instrument for investment, while derivatives are used for speculation or hedging purpose. Okay, we have discussed what is hedging right now. Then the value of equity affected by performance of the company, market conditions, volume of buying and selling, etc. Whose value? The value of equity. And the value of derivatives, the value of derivatives lies in the value of underlying assets. Now, which of the following statement is or are correct related to your equity and derivatives? A, B, C or D? What will be the right answer for the 9th question? Let me know. Venkat is saying D. Okay. What about rest? It's a very simple question if we know the concepts behind the equity and derivatives. Suresh is saying B. See, the right answer will be your D. That is, all are correct. All 1, 2 and 3 are correct. Because whenever we are talking about equity and derivative, they are financial instrument. Obviously, it is financial instrument. Okay. Now, equities are instrument for investment. It is true that we use equities for the investment. Now, derivatives are also a type of investment. You can invest in this particular market also, but they help you to speculate the risk, to minimize your risk. So, derivatives helps in the speculation, or derivative helps in the hedging process also. Now, the value of equity affected by performance of company, that is true equity. It means we are talking about shares, and the value of shares or the profit and loss on the shares will depend on the profit and loss of the company. So, it is obvious that company's market conditions is important to raise money from the shares. It is important how much volume of shares are selling, purchasing in the market of your company will decide the value of your shares. And when it comes to derivative, the value of derivatives always derive from the underlying assets. So, all the 3 statements are correct related to your equity and derivative. So, right answer will be your D option. Okay. Now, the next question is SEBI has recently, now this is the question which is related to the current news of your capital market, in which they are asking, SEBI has recently limited the use of IPO proceeds for unidentified acquisition too. What will be the right answer? Is it 20%? Is it 25%? Is it 40%? Is it 35%? The question is related to your current affairs. Okay, the current update related to capital market. So, SEBI is the Security and Exchange Board of India, that is the regulatory body of investment market. Then what is IPO? IPO stands for initial public offering. Whenever an Indian company wants to raise money from Indian security market, whenever the company is first time issuing its shares for the public, that is known as your initial public offering. So, what will be the right answer? A, B, C or D? 20%, 25%, 40% or 35%? Maybe 40. Okay. What about rest? So, IPO is initial public offering. Whenever a company is issuing its shares for the public for the first time, it is known as IPO. If a company issues its shares for the public for second time, 10th time, 11th time, 100th time, it will always known as follow-on public offering or further public offering, right? 40%, okay, no, it's not 40%. The right answer will be 35% of amount raised. So, SEBI has recently limited the use of initial public offering proceeds for unidentified acquisition to 35% of the amount raised. Okay, now this is the question of updated news related to your capital market. So, right answer will be your 35%, not 40%, not 25%, not 20%. It is 35%. Okay. Now, let me know how much you have done correct out of 10 questions. That is very important. How much you have guessed 3 questions right. So information again the same thing. If you are new to the channel, then do subscribe the channel and press the bell icon so that you will get notified about all the upcoming sessions for your exam, JAIIB and CAIIB. And if you have not downloaded the application, do download the application. And one more information for all the candidates who has joined the session late, that the English medium batch is starting from 16th of April, in which all the 3 subjects PPB, AFB and LRB will be covered in the subject. In this particular batch, what we are going to do, as we know that your exam is scheduled in the June month, and we do not have that much time that we will read all the bulky books. So what we are going to do, first of all, the conceptual understanding is very important. Without conceptual understanding, you can't attempt the questions, you can't guess the answers. So first we are going to cover the conceptual understanding of all the modules. As we know, the 5th module is also added in the PPB section, in the PP subject. So we have to cover all the topics, concepts related to your all modules from A to E. After that, we will do certain previous year questions practice in this particular batch, and we will do practice of the questions as we are doing on the YouTube also. Every day from Monday to Saturday at 7:30 AM, we are going to practice more questions in the particular batch, which will be based on your previous year exams analysis. So this batch is starting from 16th of April. PPP sessions or PPB classes will be starting from 18th of April. Okay. Now this batch is with books. You will have the Macmillan books in this particular batch. Now we know that books are very bulky and it is very hard to cover all the books, but we are there to guide you that how you have to cover the books and what recent topics are very important to cover to qualify this particular exam for the first attempt or in the next 2 months. Okay. So to buy this particular batch, you have to go to the Adda 24/7 application or the website, and you have to use a certain code, that is Y496, on which you will get the 77% discount. And if you purchase the same batch with Adda 24/7 application, you will get the 78% discount by using the code Y496. Okay, so this batch is starting from the 16th of April. Let's meet there in the live sessions of your paid classes also. So that's all for today. If you have any doubt related to session or any question or any concept, you can ask in the comment section. Okay, if you are watching the particular session recorded or you are watching after live session, then you can ask your question in the comment section also. Okay, so let's end the session. Thank you all for joining the session and stay safe.